Liam, there's a debate, important debate taking place on this in the House of Commons. Tomorrow, you have a GB News exclusive for us.
I do. So tomorrow there's another debate on the finance bill. That's all the measures in the autumn statement. And of course, one of the measures in the autumn statement, Nigel, which we highlighted the evening after the statement, is the energy profits levy. This is the so-called windfall tax. Now, oil and gas companies operating in the North Sea, they already pay high taxes for a long time. They pay 40% on their profits, which is much higher than the 19% of corporation tax, which is going up to 25%. Then in May, Rishi Sunak put that up to 65%, and then Jeremy Hunt in the autumn statement put that up to 75%. Now, the press focuses on what Shell says, what BP says, these massive oil companies. To them, the North Sea is nothing. It's a backwater.
And to be honest, to most people listening to this and watching this, when they hear North Sea, they're going to think those big firms,
but those firms do not dominate the North Sea at all. The firms that dominate the North Sea are small, often British oil and gas exploration companies, and they're brought together in an industry body called Brindex. Now, Brindex is the Association of British Independent Oil Exploration Companies, and I've got here a letter that Brindex wrote to the Chancellor over the weekend, and it makes for some pretty uncomfortable reading. These are the small energy companies that account for about 60 or 70% of the oil and gas that we currently extract from the North Sea, and thousands of jobs, well-paid jobs, for skilled and semi-skilled workers. And I've graphicized a couple of the paragraphs from this letter, if we can go to that now. The first is, Brindex is saying to the Chancellor, the latest rise to 75%, that was what was in the autumn statement, Nigel, poses an existential risk to the industry, and with it, those jobs and our nation's energy security. UK upstream companies, that's the oil and gas exploration and extraction companies, can no longer shoulder this extreme open-ended tax burden. And, says Brindex to the Chancellor, if we continue down the path of the current anticipated 75% rates, further investment in the North Sea becomes unviable, and so begins a rapid onset of the decline of the North Sea. Nigel, this morning on GB News exclusively, I spoke to somebody called Jacques Thomé. He is from Tailwind Energy Company. They're one of these small British-based companies doing their thing in the North Sea. He's speaking in this clip that's coming up as a spokesman for Brindex, that is, many of the British small-scale oil and gas companies operating in our waters. This is what he said.
Really here today to talk about what is an HMT-inflicted complete collapse of the North Sea. There will be capital flight, and the timing of this is very poor given how strategic the North Sea is right now in the face of war with Russia and runaway inflations. This finance bill will increase energy costs to consumers. It will actually lower revenues over time for the HMT because they are on the hook for £20 billion of decommissioning, and that will accelerate as fields get decommissioned earlier.
Well, there we are, Liam. It's pretty clear, isn't it, that you know, what he's really saying is if the oil price is through the roof, we can just about live with this. But if the oil price is not, then we're struggling anyway. Investment is going to decline. I am stunned when you said 60 to 70% of the North Sea investment of effective production is from these smaller companies. I mean, I've never heard of Brindex.
Because the business press doesn't cover them, because they're not glamorous, they're not high-rolling executives with, you know, flashy offices in the City of London behind your head, Nigel. But they are the oil and gas companies that get into the difficult-to-get-at reserves that we need to access in order to keep those North Sea jobs going and in order to preserve our energy security. Now, this is being debated as part of the finance bill in the House of Commons tomorrow. And there will be many MPs, I think, who will say, of course, we need to tax them and all the rest of it. But I think there will be some MPs that say, hang on, is this really the right thing to do? Now, Brindex, as far as they're concerned, they're saying they don't particularly say it's impossible to live with the 75% per se for some time. They realise that these are exceptional times. They realise that there's going to be public clamour for more money from the oil and gas industry. What they're saying is don't tax them on all their profits from zero all the way up. Tax them on the profit that they make when oil is above $75 a barrel, because that is a windfall tax. That is a pure windfall tax. Rather than just giving them a much, much, much higher, 3 times higher, even after the increase in corporation tax to 25%, 3 times higher rate of corporation tax on all their profits, because these aren't global companies that are operating around the world and making huge amounts of money. If they fail in the North Sea, they fail, the jobs go, and then the Treasury's got to pick up a lot of the decommissioning costs of their kit in the middle of the North Sea.
I think they're being quite conciliatory.
I think they are too.
And being very sensible. More broadly, Liam, I mean, this is one particular sector. Once a Chancellor of the Exchequer has introduced the very concept of windfall taxes, what's to stop them extending it to other industries?
Well, that's the deal, isn't it? That's why I'm generally concerned about windfall tax. Let's say what you like about New Labour. When they came in, they signalled for years that they were going to have a windfall tax, particularly on the privatised utilities. It was thought through. It was audited. It was discussed. They did it. It was genuinely a one-off from a seismic change in the British economy, privatising what were previously state-run, state-funded, taxpayer-driven entities. You could say fair enough, because they ended it there. In the oil and gas industry, Nigel, we've had so many changes under Brown, and then particularly under Osborne, the Tories, and then since March, it's been almost a free-for-all, going from a 40% rate of tax to a 75% rate of tax.
Extraordinary.
And a lot of these small companies in particular, they're not Shell and BP. They have what we call highly leveraged balance sheets. They've taken on a lot of debt in order to do this extraction. And if you keep moving the goalposts on them, their creditors they'll give them what we call a margin call. They say, well, I want my collateral back. You now have to pay me back half the debt.
It's just a disaster.
And then they sink. They sink.
Liam, well done for highlighting this story, for educating me about the North Sea. I just didn't know that. And look, Liam and I are going to keep on this case about